Take every trade on a trade-by-trade basis. Stay tuned, traders. We'll talk about that next. Good day, traders. Stacey Burke from Stacey Burke Trading. Hope everybody's trading is going along and you're improving each week. Today we're talking about taking every trade on a trade-by-trade basis. You want to evaluate each trade on its own merits. So there's not going to be a cookie-cutter approach that fits every type of market conditions. Every trade, you know, we talk about building your best playbook setups. We put a video on recently talking about the opening range. That's something that I use. So I look at the opening range. Look, one of the things that I'm going to emphasize the retail FX traders out there to consider is what you're up against in terms of the market. So you're up against pretty much the banks predominantly. 60% of the volume roughly is controlled by banks or large traders, maybe even more, maybe 70% with institutions and hedge funds, central banks. So if there's that much volume controlling one side of the market or a large percentage of the market, they need to constantly be drawing in other traders, other positions into the market so that they can take the other sides of their orders. And ideally, if they're building up a bigger position or positioning themselves for a bigger move, they need to create a vacuum effect almost to draw traders in so that creates order flow when they run the market back to the other side, or when they move it in another direction. There needs to be orders that they can execute throughout that process, which will often trigger an impulsive type of market trading on any time frame. So when I talk about opening range, you know, I look at the monthly ATR, I look at the weekly ATR, I look at the ranges, because what I'm concerned about for myself is I have my major levels defined on my end-of-day charts, my support and resistance levels. I look at opening range, I've got momentum lines drawn on my charts. What I'm looking to do is participate in markets that are already showing momentum. If I am in a range-bound market and I'm using the opening range, I will look for my shorter time frames, my hourly, and in some cases down to the 5-minute charts when I get certain types of setups. I look for 4 or 5 main setups for my best playbook setups. So what I mean by that is that there are rectangles, there are geometric patterns, flag patterns that build up over these couple of weeks or 3 or 4 weeks on the monthly charts. And when I say monthly, I'm talking about end of day, but over those time frames. And so you need to evaluate each trade on a trade-by-trade basis. So you may have a similar setup the previous week where the Monday, Tuesday was the Tuesday high may have been the extreme for a range. But it's important that you match that up with your other technical levels, with your other technical expertise. So you don't just blindly jump into the market. You need to always be able to define that in terms of your own criteria. If you're going to go short, there needs to be a reason why. If you're going to go long, there needs to be a reason why. And for me, that's always based off of the price action. So the trend is your friend until it bends, like Ed Sakota talks about. I think it's important to really stick to, if the market's been moving one direction strongly, it's really, and I don't mean over 1 or 2 hours. I'm talking about, you know, 2-3 days, maybe a few weeks if you're using the end of day again. But it's important to try and align yourself with the path of least resistance. So again, if they're shorting the market, they're gonna buy it up so that they can sell it cheaper, if that makes sense. Sell it, you know, at a higher price to buy it back cheaper. You know, often markets that are screaming away will draw retail traders into them because we get the FOMO, we're fear of missing out. So we'll often chase a market, get into a trade to find out that we've just bought the high or sold the low of a market. And again, no matter where you get in, for me, no matter what time frame you're on, you should always be able to predefine your risk and have some sort of way of determining a range that you can measure out as a reward to risk opportunity. So, you know, I talk about learning from Peter Brandt and Schaubacher's book, and you know, every week, you know, if you don't follow Peter on Twitter, you should. He just posts some fantastic charts. He's always got little nuggets in there, but you know, trading is a game of continuous learning. and you are going to take losses. You are going to make mistakes. You're only human. You're going to take trades that are outside of your trading plan. But the most important thing is obviously don't blow yourself up, but try to improve every single trade. So if you make a mistake, what led to that mistake? Was it your preparation? Were you just entertaining that you got on the charts outside of your normal trading time? Whatever that might be. Maybe you took on too much leverage, you took a bigger loss, you moved your stop. All the things that losing traders do. So if I made a list of all the things that I used to do that caused me a lot of stress in terms of blowing up a trading account, or taking bigger losses than I should have, or taking trades outside of my plan, over trading, getting overconfident and taking too many trades after having some successful wins, all I need to do is look at that chart every single day. So make a list of your own reasons why you've made mistakes, or the mistakes that you've made. Or mistakes where you've blown up a trading account, or mistakes where you've gotten out of a trade too quickly because you've been beaten up and you just wanted to get some profits. It's important that you figure out little ways every single week to improve, because it's you that's pulling the trigger. All those mistakes that were made by you. And that's why when you're taking each and every trade, just focus on executing your trading plan according to, if it's intraday, to the time of day, to the reason, the best trade setups. Review those. Print out 100 screenshots of your best trade setups. Get it bound into a little book. Leaf through them every day. Focus on getting better. Trade by trade. You could have 10 winning trades in a row, and on your 11th trade, it might not even be your best trade setup, whatever that is, but evaluate them on a trade-by-trade basis. Look for the same characteristics that gave you your best trade setups. So I look for certain patterns, Monday to Friday. One of my favorite trades is called, I call it the one-way ticket on a round-trip train. So it's a market that will explode on Monday, Tuesday, Wednesday, and often reverse on a Thursday or a Friday and run right back to where it started on Monday morning. And that's usually a whole week's ATR trade, and there's usually very little heat on those trades. So one of the scans that I like to run in my metastock each day is looking for a new 5-day high or low, because that tells me, based if it's in a range, if I'm at the top of a range or a bottom of a range. And then from there I have to evaluate it again on a trade-by-trade basis to see if it meets my criteria on the shorter time frames. So hopefully you got some value from today's video, traders. If you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders. It's an audio file, and as I mentioned before, I'm currently in the process of putting that into video as well for people. Focus on constant progress. This is a winnable game, but it's trading is all about performance. You can know everything about the markets, but bar by bar, can you perform? And only you can figure out where you need to work on your strengths, where you need to minimize your weaknesses or eliminate out your mistakes. And just focus on constant progress. Keep getting better. As you get better, trade a bit bigger. Simplify your trading. Stick to 1 or 2 trades. Master those. Get better at them. Trade bigger, get bigger, better, and keep moving forward. So stay disciplined, traders. Stay focused. Evaluate every single trade on a trade-by-trade basis, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.